So, okay, the first issue I want to ask you about is the real estate issue. You feel you have an answer for the real estate crisis. Can you please explain that?
Well, it all started when we were looking at a new mortgage system. Basically, in a nutshell, what we found is that the auto lease-to-own system used by the automobile industry of the last 40 years provides a system of a financial product that pays down a depreciating asset. And so we found that if you applied that exact same model to real estate, it will allow us to pay down a depreciating real estate asset. And the funny thing is that there is no financial product on the market for when the real estate market goes into a little bit of a correction. And in reviewing the benefits of that mortgage system, it's called the RADA mortgage. RADA stands for Real Estate Association for Depreciating Housing Assets. It's a mouthful, but RADA seems to give it a bit of a poetic ring to it. In reviewing the benefits of that mortgage system, we do have some financial institutions on the East Coast using it. Anyway, in looking over those benefits, we were startled to discover all these incredible values right there in the real estate market that had just been overlooked. So as just a quick example, and this is one of our favorite, is that banks and insurance companies are paying off the same asset without realizing it. Put more specifically, what happened today is, let's say you're a bank and you've loaned the cup $100,000, and not just to give an example of it, but a lot of people feel that's what the loan process was like. But anyway, you've loaned the cup $100,000. You come to me and say, Raghu, if that glass of water fails to, pay its monthly mortgage and defaults, I want you to reimburse me. Let's say the mortgage was $100,000. And so I say, well, Mr. Vatsala, don't worry. If the glass of water fails to pay you the $100,000, I'll reimburse you and make you good. So Wall Street comes along and says, well, look, here we have Mr. Vatsala, and he has a $100,000 asset called a securitized mortgage. And over on this side, we have Mr. Raghu, the insurance company, called a credit default swap, and this is an additional $100,000 asset. So Wall Street says we have two separate assets, $100,000 each. In other words, we have $200,000 worth of assets. But we don't. It's simply the same asset counted twice. Now, the reason why that's important is that here we are today. You've written off 35% of your asset. I've written off 35% of my asset. Combined, we've written off 70% of the same asset. Normally, what would happen in a healthy functioning system is that if you wrote off 35%, as the insurance company, I would reimburse you. But that didn't happen this time. We have, I believe it was Iceland, and their banking and national economy, collapsed overnight because they had these mortgages that were no good. So they just wrote them off. You have a bunch of banks in Europe, and here in the U.S., they wrote them off without ever going back to collect on the insurance policy. Meanwhile, you had AIG and other insurance policies, and they also wrote off on the same asset. So here we are today, and what we're saying is that there's been a double write-down on these assets without realizing it. And so we're suggesting is that if you simply refinance that homeowner at, let's say, 60, 70 cents on the dollar, you, as a bank, will get a refund for 35, even 40%. Me, as the insurance company, has no more liability, and the homeowner has a mortgage that he can afford to pay. And if he can't, he can turn around and sell it. Because in today's market, the real estate depreciation on average is about 35%. So even if he can't pay it, he'll be able to turn around and sell it, and we will be able to save the banking system. That's you. We'll be able to save the insurance system, and we'll be able to save the real estate industry.
Because, for me, for a simple guy like me, that's a little bit much to all take in at one time. Is there any way you can put that into a synopsis that any Joe could understand that?
In a nutshell, we've given different names to the same thing, and what that thing is the homeowner. If you take care of the homeowner, the bank will be taken care of, the insurance company will be taken care of, Uncle Sam will be taken care of, Wall Street will be taken care of, and the government will be taken care of. We've been treating these as separate entities unto themselves, but they're nothing more than the value of the homeowner. And so simply by taking care of the homeowner, everybody else is automatically taken care of. And that's in a nutshell how we were able to discover this.
So you mean the value of the homeowner means his credibility to pay back the loan, his income to debt ratio, or what? You don't mean the value of the house itself. You mean the value of the homeowner's ability to pay back. Is that what you mean?
In other words, the entire value of me as an insurance company, you as a bank, Wall Street as investors is based on nothing more than that home. And that home's value is based exclusively on the homeowner's ability to pay that. So yes, it really is this. The hinge of the entire economic system is the homeowner. And the funny thing is that all our so-called reforms have looked at everything else but them. And the reason why we were able to find these extraordinary values is we started with the homeowner and worked our way out.
Okay, so why is it that when they're trying to just pour money into the homeowners by giving money to banks and giving money to the insurance companies, why isn't that helping the homeowners?
Well, here's the funny thing that we discovered is that just in this example I'd given you earlier, that if we help the homeowner, it helps you, the bank, me, the insurance company, and Wall Street. So what the government has done is just the opposite. They tried to help Wall Street, they tried to help the insurance company, they tried to help you, the bank, and maybe do a little something for the homeowner. So what it means is that the government is actually paid 3 or 4 times for the same asset. So they're doing it the far more expensive way. They're going to each of the leaves and trying to water them separately rather than just putting in a little water in the root. And so what we're saying is if you help the homeowner, it will clean up the inflationary pressure of having paid 3 or 4 times for that same asset of the homeowner.
So would you say that you're discovering this principle is because you're able to somehow look outside of the box or look at new possibilities, take a fresh look at something, whereas the so-called experts that are dealing with this are stuck in some kind of rut?
Well, the rut that they're stuck with is that they really think that they're islands and worlds unto themselves. And therefore, everything is being looked at from the bank out. And they're not getting the whole picture. The idea of democracy is you start with the little guy and work your way up, because then you catch everything. And really what we're talking about is the demonstration of the point. It's just very dramatic because we get to talk about hundreds of millions or billions and even trillions of dollars. And it's just it personifies the point of why we have a democracy and the whole reason of why we work with the little people. That's where the answers are.
It sounds like that whole when they say too big to fail, that they're just getting too big and now they failed. So, okay,
I like that. There's a little that's actually I never saw it from that fresh look, but that's a brilliant way of
so you that. Say also, so now we've satisfied the real estate crisis, very simply I might add. So now you've said you've also have some solutions to the healthcare crisis, which is an issue that's been just going on through one presidency to the next, and now they have some new so-called solution. Can you tell us about your solution and how it compares with what's been done so far by President Obama and his group? Precious